Hey, morning, people. Morning. Let me know if you can hear me, and we'll get this a rollin'. So, let's see here. Happy Wednesday, November 1st. We wrapped up the month yesterday, the month of October. Hope you all had a good Halloween. And let's see what we got cooking in today's market because today is indeed the big day. So we're going to break down some of the news that may have happened on the overnight session, right? Let me just see one thing here. Hold on. Let me just do one of these. There we go. So let's see what we got. We'll take a look at what we saw in the overnight session realistically, and then we'll take a look at what we've got. Sorry, there's just a trade going on right now, and then we'll take a look at the new. Well, we'll take a look at the news, and then we'll take a look at what else we got cooking. So, sorry, got a little distracted. We got to make sure the team's eating right with these trades. So what I've got going on right now in this market today is the big day, right? We got the Federal Reserve going on, and everyone's in anticipation of that. So if you're a new trader, if you're a trader that hasn't necessarily traded the Federal Reserve before, or sorry, the meeting minutes, the Fed's funds rates, right? All of this good stuff. I would highly suggest watching and keeping an eye on this. These events get very volatile, and in the morning sessions, what happens generally is sideways movement, right? You get sideways chop, you get indecision, and these aren't necessarily days to put on larger size. These aren't necessarily days to get creative or really aggressive, especially in the morning sessions when we are expected to see just sideways movement because everyone and their moms are anticipating the Federal Reserve's Fed's rate that is expected to stay between 5.25% and 5.5%, right? We have one more Fed meeting after this one in December, and what a lot of people are waiting for is going to be the dot plot and the expectations into the end of the year, where right now, as it stands, I believe there's about a 25% chance or so of a rate hike to wrap up the year in December. So we have the wait and see approach realistically by a lot of investors and traders to put a strong emphasis on incoming economic data. And there won't be any new economic projections at this meeting, putting a bigger spotlight on Jerome Powell's policy statement and press conference. So the U.S. economy that's continuing to exert surprising strength combined with geopolitical risks does complicate the Federal Reserve's job, in essence, of bringing down price pressures. And less than 2 weeks ago, Powell indicated that the persistently strong economic growth could lead to resurging inflation and require further tightening, but he's also aware that the rate hikes that the central bank has already implemented haven't achieved their full impact. In addition, long-term treasury yields have also surged in recent weeks, doing some heavy lifting for the Fed, right? This is one of the main things that he talked about, that this increase in rates has, right, done a lot of tightening for the Federal Reserve, so they're taking that into consideration. Some are also questioning whether and how the conventional economic model like growth-fueled inflation still apply, holding to a simple historical correlations of what growth and labor market conditions mean for inflation in the face of positive supply developments is a recipe for overshooting and causing an unnecessary downturn. This is what Chicago Fed President member Austin Goolsbee said. So another reason why the traditionalist perspective on current underlying economic environment may miss the mark is the role of central bank's credibility in keeping inflation expectations anchored now versus in past high periods of high inflation. So we got to keep that in. We got to keep that in mind and take in the context of the trading day and see what Jerome Powell says in the Q&A and what we might see in terms of any hints at future projections. It's going to be a massive day, realistically, in the Federal Reserve into the afternoon, and I think the morning session is going to be a session that a lot of people should consider maybe even skipping or just watching and observing the sideways momentum movement, right? Not necessarily something I want to be super active in myself, waiting more so for what happens into the Federal Reserve, which comes out at 2 p.m. Eastern today with the Fed decision in terms of the rate, and then we'll go from there. Another piece of information today, right? We have WeWork, or this morning, the bond auction actually came in trying to lift the bond prices a little more. And we have WeWork in terms of the news. WeWork is pretty much getting into that Chapter 11 bankruptcy, down nearly 40% in the pre-market trades on report that the company will file for that Chapter 11 as soon as next week. So it underscores the flexible office workspace firm's a dramatic reversal of fortunes over the past 4 years, with a market cap of $47 billion in 2019 and now just worth $185 million. So it's a staggering drop. I think the price of the stock is down, over 90%, right? If that math works out. So WeWork flagged going concern risks back in August and had been renegotiating leases on almost all of its locations, right? So a lot of downside there. That's another little news event that occurred in this recent trade, but there's not too much else to take into consideration. This morning we have PMI Manufacturing Index, ISM Manufacturing Index, Construction Spending, Job Openings and Labor Turnover Survey, EIA Petroleum, Inventories, and the FOMC, where everyone is going to be present at, realistically. We're going to trade that with our live trading room, and we'll go from there. I'm going to take it very easy this morning, not expecting too much over the past few sessions. Starting at the beginning of the week, right on Sunday, we have just seen presented upside with what I could see as kind of a fragile bid. So yesterday we came into the naked POC as well as this distribution area around the 4.210s, 15s on the S&P for a little pull down. Right now they're still holding above some key distribution areas. So as long as price holds above 41.92 to 96 area, where there was a lot of buying yesterday, I could see the case for the bullish move to trade into those mid-20s, then the mid-40s, and then the low 60s above. Those are going to be the key resistances for the bears to come out. If any bear movement does come out, that's the chance that they have. The real bears are under 41.90-ish, right? And I think a lot of people are getting ready for some kind of Jerome Powell turbulence, and Apple comes out with earnings tomorrow. That could shake things up to see maybe the final low for this cyclical move into the start of next year and the end of this one. So that's what I'm looking at here. You can see these distributions on the chart. With that, I'm going to open up the live trading room for everyone. Good morning, Marco. Good morning, everyone here that's watching. And we're going to open up this live trading room for futures. We had some great trades over the last few weeks, and let's see if we can continue that patience today, because I don't want to be super active this morning. Maybe I trade a few micros here and there, but chances are you're going to get muted market activity leading into the Fed. And I know a lot of people won't even be at their desks. So why don't we open up the room? I'll see you all in there. We'll open up the room for the Federal Reserve as well. And we'll do this again tomorrow. We'll wrap up what the Fed did, what they said, and wrap up the week. So I'll see you guys again. We'll do this again tomorrow. Thank you.